Good afternoon, everyone. Thanks for joining us for today's webinar, The CARES Act, Understanding the SBA and Paycheck Protection Program Loans and How They Apply to You. Before we begin, I'd like to make sure everyone can hear me okay, so please just type the word yes into the question box if you can hear me. Great. Each attendee is in listen-only mode to avoid having background noises that may distract you from listening to the webinar. We will have a question and answer portion at the end of the presentation, and throughout the presentation, a staff member will be managing the question box on your GoToWebinar control panel. If you have any questions during the presentation, please type them into the question box and we'll answer it for you. This webinar will also be posted online at omca.org for our members to view at any time. If you haven't already explored the OMCA webinar archives or are not aware of our home study offerings, please check them out on our website, omca.org. And without further ado, we'll turn it over to you, Tony.
Thanks, Rebecca. Really appreciate it. Today, got Danny Fink with us. Danny is a certified tax coach with the American Institute of Certified Tax Planners. And I know for all of us who've gone into the mental health field, there's nothing more exciting than the talk about numbers and taxes, right? And however, we're in a very interesting phase at this particular point in time in regard to dealing with coronavirus and the now newly, I guess we were talking a little bit before, as about 12 days ago, Congress passed the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act, which is why we're having this webinar today. There's monies available through the SBA, the Small Business Administration, related to business owners and various types of businesses. And as with everything that's comes through, not just comes through Congress, but everything that's designed to try to be a one-size-fits-all and try to impact a number of people across the country with 350 million people, it's got some challenges to it and trying to figure out the complexities of how does this actually work. How does this actually work for me? And so today what we wanted to do was invite Danny, who's been up to his eyeballs in this thing for 12 days, and talk to him a little bit about how this applies to us as in the mental health field, whether we're in agencies or private practices or things along those lines. So Danny, I think the first question really is this is the laws passed and the guidance comes out. The guidance has changed a couple of times. The forms have changed a couple of times. Do you anticipate that as settling out, or is this a constant change thing that's going to go on for a little while?
Well, yeah, I think it's going to continue to change. You know, like you said, the bill was just passed 12 days ago, and Congress passes the bill, the president signs it, but then the SBA has to issue the guidance to fill in all the holes and the processes and how things are going to work. You know, the banks got hit with this. They didn't know it was going to happen, so they've got to get their processes up and running. And, you know, it's been changes daily, if not hourly, as we've gone through this. And I don't anticipate that those changes stopping anytime in the next week or so, but maybe after we get through the next week, maybe then we'll finally settle down and have some guidance that we can rely on going forward.
So basically what we're talking about is, and today is, this is the processes, or this is the guidance as it relates to on the 8th of April at noon Eastern time. And that might change technically by 4 or 5 o'clock end of business today to some degree.
It sure can. To give you an example, you know, there's really two loans as part of this. There's the EIDL loan, the economic injury disaster loan. That existed before the CARES Act went into or was passed, but the process was different. Basically, it was a very involved application process, and I actually did a couple of these, I guess it was 2 weeks ago now, and literally it took 6 or 8 hours to fill out the applications. You then sent them in, and at that point, there was no $10,000 grant portion of this. So you were just applying for an SBA loan like sort of normally did. The people who submitted those more complex or complete applications then got emails that weekend. I guess that would have been March 28th, 29th timeframe, saying, we have simplified the process, click this link, and it took them to the online version of the EIDL application, which is still out there now. And as part of that application, there's now a box you can check that asks for that $10,000 grant. The application itself only asks for two numbers. It asks for your revenue numbers and your cost of goods sold. And that's it from a number standpoint. We just found out this morning that the time frame for getting that money is different. On the application, if you had applied 9 days ago, you enter your bank information and it says funds will be deposited in 3 days. Well, here we are 9 days later, and I don't know of anyone that's gotten the $10,000. And I found out this morning that it now says it's 3 days from the date the loan is approved. And someone from the SBA said on a webinar yesterday that it's taking about 21 days for approval from the time you submit your application. So you're really looking at about 24 days from the time you submit your EIDL loan application until the funds would actually be deposited.
So timeframes are going to change around a little bit, and you said the money has changed around a little bit. So let's talk a little bit more about, in the beginning, like who's eligible for these things, right? I mean, the size of the organization. So give me a little sense of that.
So basically, it's what they call small businesses, 500 or less employees, which can be any sort of business organization, whether it's a sole proprietor or a partnership or an S Corp or a C Corp or nonprofits. The requirement is 500 or fewer employees.
Okay. So how does this work then? Are 1099 contract employees eligible for some of this money in some way?
Yeah, so the initial guidance was that the 1099 employees were sort of going to fall under the employer that was issuing that 1099 to them, but that guidance has changed as well. The current guidance is that they would apply for the loans themselves as a self-employed person. And this is in regards to the PPP loan. Those applications are supposed to be starting to be accepted this Friday, April 10th.
Okay. People who are, regular W-2 employees, are they eligible for this money, or does that ultimately come to them through their employer?
Yeah, they're not eligible for either of these loans. The benefit to a W-2 employee would be their employer is getting this money, and the PPP loan, its prime purpose is to keep employees on the payroll so their employer continues to pay them their salary.
Okay. So anybody in that position is going to be relying on their employer to apply for these particular loans, and then it pass that along to them in some way, shape, or form.
Right.
Okay, great. So tell me a little bit about what's the difference between these two functions in these loans, through the regular SBA loan and then through the, what is it called? It's the PPP, which is basically the Paycheck Protection Program. What are the differences between those?
So the PPP loan, again, its primary purpose is to keep employees on the books and receiving their payroll. The EIDL loan can also be used for payroll, but it can be used for any normal operating expense as well. So whether that be paying for the cost of your goods or your rent or, office supplies, normal operating costs. So that's the biggest difference. There's some differences in interest rate and payback period and that sort of thing as well. But the biggest difference is in the purpose of the loan.
Okay, so can people apply for both loans?
They sure can. And most of my clients are applying for both loans. One requirement, though, is if you apply for both loans and get both loans, you can't use the loan proceeds for the same purpose. But let me clarify. Same purpose meaning if you could use loan proceeds from the PPP loan for your payroll for April and May, and then use the EIDL loan proceeds for payroll for July and August. So that's, even though it's both payroll, it's for a different time period. So that doesn't, that's not the same purpose.
Okay. So same purpose, and the way most people think of same purpose is not actually the same purpose, right?
They can
It's
both be used for payroll, just not in the same payroll period.
not for the same thing at the same time. Is that basically what it is? Okay. And so, so is there a cap amount on the money that people can apply for? How does that part of that work?
On the idle loan, the max is $10 million. But of course, most people aren't going to get anywhere near that amount. You know, they're going to look at financials and determine your need and your ability to pay back and all that. With the Paycheck Protection Program, the limit for most people is going to be 2.5 times your average monthly payroll. There's a dollar limit as well. I think it's $10 million, but you know, very few businesses are going to reach that. So it's going to be that 2.5 times average monthly payroll cost. And payroll cost is also not quite as simple as what it sounds. So if you are an employer with actual employees, you're paying them wages, so the wages count, but also like the state unemployment that the employer is paying would count towards that. If you have a group health insurance plan that the employer is paying a portion of those premiums, that counts. If there's a employer-sponsored retirement plan, the employer's share of those contributions count towards that payroll cost. So you'd look at, if you've been in business for the last year, what was your total payroll cost for that 12 months? Divided by 12, that's your monthly average. Multiply that by 2.5, that's your max loan amount.
Okay. So it's really the complete cost of payroll, not just the salary that's paid to people or the hourly wage that's paid to people. It's the total cost altogether, and that's what they're working to reimburse. Now, how does that? When you said that there's going to calculate also your ability to pay something back.
Well, that's if you do the idle loan and you are applying for more than the grant portion, then they would be looking at that. But most people that have talked to and I'm working with, they are really interested in the PPP loan for the payroll and the grant portion of the idle loan. And neither of those look at the payback portion.
Okay.
So for most of us, that won't come into play.
So you had mentioned something earlier today about that $10,000 not actually being $10,000. So explain that a little bit, where that is on that check.
So when that idle loan application went from being the really involved application to moving online, which was Monday a week ago, the wording was, check this box if you want a $10,000 grant, and it will be funded within 3 days. I guess it was Monday this week that I started hearing that wasn't going to be the case. And it's sounding more official now that it's going to be $1,000 per employee with a $10,000 max per employer. So if you've got more than 10 employees, you still would get your 10,000. But if it's only one employee, it sounds like you'd get 1,000.
So if I'm a sole, go ahead.
It's unclear if a sole proprietor counts as an employee or not. I haven't seen guidance on that.
And that's in the idle loan.
That is on the idle loan, right?
Okay. So on the PPP part, a sole proprietor can apply from that perspective for sure. You're just not sure on the idle loan whether that's going to apply there or not. Okay.
Right. So the sole proprietor on the PPP, their max loan calculation is going to be a little different than an employer with other employees. You know, if you've got actual employees, we're looking at payroll cost. As a sole proprietor, you're not on payroll. So they are looking at net profit. So they'd be, in most cases, looking at what was your net income for 2019 for the year, divide that by 12, that's your monthly monthly profit, and they're considering that the sole proprietor's payroll. And then that would be multiplied by 2.5 to determine the max loan amount.
So we're not sure whether or not that the other expenses that go in with self-employment tax and your health insurance covering that, whether that's going to be applicable on the idle side of this thing.
On the idle side, it would not be.
Okay.
Idle is just, so the question on the idle side would be, does the sole proprietor count as an employee? And are they going to get their $1,000 would be the question on the idle side.
Mm-hmm. And on the PPP side, there's no real calculation if I'm a sole proprietor, or I would guess a 1099 person who's going to be considered a sole proprietor in a lot of these cases, that that will account for the other costs that go in, because that certainly would subtract from the net, correct?
So normal business expenses will obviously subtract from the net. I guess the question would be, if you buy your health insurance, is that going to count as an employee, a cost like it did for the employer? I haven't seen guidance on that, so I don't know about that question.
So we are in a gray area there.
Right. So those individuals can't apply yet. That application period, they're going to start taking those applications this Friday. And if it's anything like what the application process was for employers last week, we probably won't know before Friday. I'll tell you a little story. The applications for the PPP loan became available last Wednesday. So we spent those 2 days preparing those applications to be ready to submit on Friday, only to find out Friday morning they had changed the application. I checked with the bank, and their website still had the old application on there. They didn't know about the new application at that point. So they had to get back with me and found out that we could not submit the old version that we had already prepared. So we had to redo all of those. So I would be surprised if they have guidance beforehand for the sole proprietors this Friday. Although I guess they've had an extra week to prepare for this one, but I haven't seen that information yet.
Okay, so we're still not super clear on the sole proprietor standpoint, and I guess there's a lot of sole proprietors, so we're just talking about the net gain. So it doesn't matter whether I take a draw or whether I've actually given myself a paycheck. We're talking about what the net is over the course of a 12-month period. So basically off your tax return, is that correct?
Essentially, yeah, it's going to be the number off your tax return, the bottom line net profit that you paid self-employment tax on.
Okay. So tell me about the loan forgiveness part of it. There's a part of this that can potentially not be considered an actual loan, but more like a grant in some ways. How does that particularly work, Danny?
Right. So I guess there's two forgiveness parts. The idle loan, that what we thought was going to be $10,000, and now it looks like it's $1,000 per employee. That portion of the idle loan is forgiven, but there's no calculation on that one. If you get that grant part, that's going to be forgiven. The more, I guess, the topic that's been discussed a lot is the forgiveness part on the PPP loan. And I'm going to give you an example of how it works. So we've talked about the max loan amount. So if we have a business that has actual employees and their average monthly payroll is, say, $10,000 a month, including any retirement plan and the payroll taxes, et cetera, everything that's included in there is $10,000 a month. They could get a $25,000 loan. All right. The forgiveness part is the wages that are paid, or the payroll costs that are paid over that 8 week following the date of the loan. So let's say you get your loan funded on May 1st. So the wages and payroll costs that you incur in May and June will count towards forgiveness. The rent or mortgage payment that you pay for the business during May and June, and your utilities that you pay during May and June. So if, let's say, our monthly rent's $2,000 a month, and our utilities is $200 per month. Well, we've got 2 months worth of payroll, that'd be $20,000. 2 months worth of rent would be another $400 worth of utilities. We'd have $24,400 of our $25,000 that could be forgiven.
Okay. And by forgiven, that means I don't pay that back, right? There's in relation to that, that's just money that I keep, basically.
That's free money to the business owner.
Now, does
Well,
that count on as income for me when I file my taxes in the following year?
it is not treated as income, so that's the good, obviously. But of course, you're not pocketing that money, because in order to have it forgiven, you had to pay your payroll. So the government essentially is paying your employees for you.
Okay. Well, that makes sense.
So that first example, where basically almost all of it was forgiven, we kept all of our staff on board, paid them their normal salary, and almost all of the loan was forgiven. But there are things that will reduce the forgiven amount. If you reduce the number of staff, the percentage forgiven also goes down. And if maybe you keep someone on board, but you reduce them to 3 days a week, so their salary or wages are going down by 40%. Both of those things would reduce the amount of the loan that's going to be forgiven.
Because I basically cut my overhead, right? So they're not going to pay for me cutting my overhead so that I can pocket it. Okay.
So then the owner would be pocketing that money, right? Now there is a little leeway there, in that if you rehire your staff by June 30, it doesn't count against you.
Okay.
But what would alter the calculation is you still haven't paid the salary. So you'd get 100% of a lesser amount. So if you reduce your payroll costs, instead of it being $20,000 during those 2 months, if it's $10,000, you'd still get 100% of that portion forgiven. But if you didn't pay the payroll, that's not going to be forgiven.
So I'm going to get maybe 100% of the 10,000 forgiven, but I still have to probably pay back the other 10,000 in that scenario. Okay.
And if you didn't rehire that person by June 30th and only paid 10,000, well, then it's going to be a percentage of the 10,000 is even going to be reduced. You know, if you had 4 employees making up your original 20,000 and now you have 2, well, only 50% of the salary that you paid would be forgiven.
Okay.
So you may end up at $7,000 forgiven.
So there's a lot of numbers in this stuff, right? I mean, so obviously it's a numbers game and things along those lines. And I guess the challenge for most people is trying to figure out how something applies more to their specific situation, right? Mm-hmm. So we're going to have some people who have some employees. We're going to have some people who are for-profit, some non-for-profit, some are sole practitioners, and I don't know too, Danny. And does it depend? Does any of this matter in terms of how my business might be organized? Whether I'm a sole proprietor, and I guess an LLC is technically in a lot of ways a sole proprietor. Whether I'm a partnership, whether I'm an S corp, whether I'm a 501c3. I mean, does any of that matter in that?
Yeah, some of it does matter, in that how the calculation is done would depend. So if you're a sole proprietor, whether you're an LLC or not, and you have not elected to be an S corp, for example, there is no wages. So you're only going to be looking at that net profit that we talked about in determining your loan amount. Whereas you may be the only owner of an LLC. If you've elected to be an S corp, well, then you're paying yourself wages. And the wage portion that you've paid yourself as an employee of your corporation count towards the calculation, but the additional profit of the company doesn't come into play.
So just the wages and not the distribution.
Not the distributions, right. So, you know, the people who are keeping their salaries low as an S corp owner in order to maximize their tax savings, if they had paid themselves a larger salary last year, could actually get a larger loan under the PPP than, you know, if they paid a lower salary.
Hmm.
So from that standpoint, it does matter to a certain extent. But if it's a normal company with, I'll say normal, if it's a company with other employees beside the owner, we're just going to be looking at what's the payroll cost, and it's not going to depend on whether you're a corporation or someone that's just an LLC or a partnership or a nonprofit. We're still looking at those payroll cost numbers.
Okay. So if I'm a nonprofit agency, I've got 300 employees. Those are the scenarios we've talked about primarily already, right? There's the potential of the idle loan to be from that standpoint, and also the PPP that I could also apply for, in terms of what all my what all my costs are related to that employee, and calculate it from that perspective. Correct?
Right.
Okay.
So, given that case with a nonprofit with 300 employees, obviously a PPP loan is very attractive. Their payroll cost is going to be very large. And if they're able to use the PPP loan to keep those employees on the books, well, essentially the government's going to be paying those salaries for 2 months, and almost the entire loan would be forgiven. So that would be very attractive to them. If they need additional funding, for other operating costs, then the idle loan may come into play as well. But the majority of that loan is going to be paid back.
Now, this also doesn't matter. Obviously, in our profession, we are going to be considered an essential business, correct? We're not really shutting down too much, but we have an ability to interact and still do, stuff like we're doing now, video interface and things along those lines.
Yeah.
So that doesn't necessarily impact this one way or the other, whether we're still operating or whether we've had to close completely. Is that accurate?
Right. The fact that a business is termed essential wouldn't come into play. There is a question about that you've been impacted. Practically every business is impacted in some way adversely. I guess there's the rare exception, but that's the limitation, is you have to have been adversely impacted.
Okay. Do you have to prove that you've been adversely impacted?
Not for what we've been talking about.
Okay. So let's say I have partners. What if I have partners and we're maybe 2 or 3 partners or something like that in a group practice of some sort, which might have some employees, some maybe W-2, some maybe 1099. How does this impact partnerships?
So if you're an actual partnership filing a partnership tax return, that partnership entity would be the organization filing for the loan. And then what you could count towards determining your loan amount would be your employees that are actually W-2 employees would count. Guaranteed payments to the partners would count. Payments to 1099 contractors would not, and distributions or profits of the partnership would not count in determining that amount.
So what I'm paying to W-2 employees and what we're paying ourselves would count from a salary standpoint, but not the distribution that would occur does not count in that sense. Okay. Now I saw something somewhere along the line that had to do with like a 20% ownership element of something, and because people might be in multiple businesses, things along those lines. Tell us about that a little bit.
Right. So on the application, it asks for every owner who owns at least 20% that they have to sign off or initial that all the criteria are being met. And if one of those owners who own more than 20% own another business at more than 20%, you have to disclose what those businesses are. And it's basically to keep someone from double dipping. It's essentially it means that you can't have more than one company get a PPP loan, because you may have 2 separate companies and they both may have employees. So that's what they're asking about.
Okay. So for example, there might be a number of people who, like a situation that I might be in is where I not only own the practice, but I also own the building and I pay myself rent, right? So what they're going to say is you can't get two loans related to this thing from that
Exactly.
standpoint.
Those two businesses are interrelated, and I'm in the same situation as you are. I've got my accounting firm, and I've got a different business that owns the building, and obviously that company doesn't have any employees, so there's no payroll cost anyway. Although I did have to disclose that business exists.
So none of this. So if we're so that part is true. So when we get down to like a solo practitioner, as we've talked about a couple of different times, the issue is what the net revenue is. Basically, you're turning in your tax return more or less. The net revenue for the year divided by 12 times 2.5. So that's sort of what we're looking at from the PPP side of it.
Right.
And that probably doesn't count. You're not necessarily going to be able to count your. It depends on. I don't know how the health insurance still works into that. If I'm an employee, that health insurance cost works in. But if I'm a sole proprietor doing my own health insurance, we're not sure whether that's going to exactly count that way or not.
That's right. We don't know if the health insurance will count. We also don't know what's going to count towards forgiveness for the sole proprietor.
Mm-hmm.
Because for the business with employees, we're looking at payroll cost, rent, and utilities for that 8-week period following the loan. But for a sole proprietor, there is no payroll. If we follow the logic of how we determined the loan amount, you would think profit. But if they've really been adversely impacted, maybe they don't even have any income during that 2 months.
Right.
Would that imply that nothing's forgiven because they were impacted severely? That wouldn't seem logical, but I don't know the answer to that. So that's some guidance that hopefully, I guess we've got 2 months before the forgiveness period would come into play. But at this point, I haven't seen anything that mentions how forgiveness would be determined for a sole proprietor.
And especially in our industry, because we don't really, we're a service, so we don't sell goods or we don't have overhead that way or any of that kind of stuff, right? So it's our services that could be impacted negatively by a drop in a number of people that we're interacting with and things along those lines. And we don't know where the guidance is related to anything like that yet.
Right.
And I'm just asking this question because I don't really know. In other factors of the economy, how much does that actually apply? Or are we, because we're sort of on the medical side and the service where there are more tendencies to be solo owned practices, is that somewhat unique and not necessarily something that is being highly considered on that end of it?
It's certainly not unique. I mean, think of real estate agents for one, are going to fall into that category. And really anyone that's getting that 1099, you could think Uber drivers would fall into that category, and really any sole proprietor type of business. There's more of those businesses than others.
Okay. So we'd like to think that
we're looking at are generally smaller.
Right.
As far as the loan amount goes.
So they haven't really tipped their hand about what the guidance is for that yet. There's going to come out with that on the 10th. Is that what you said that comes out?
So the sole proprietors can apply for the PPP loan on the 10th.
Okay.
I haven't seen guidance about forgiveness for the sole proprietor.
Okay. So let me go real quick. What's the in the payback? What kind of interest rate people looking at if they have to pay something back? What kind of time frame are they looking at?
Yeah, so that's changed a couple times since the program was announced. Initially, it was going to be 4% interest rate paid back over 10 years. Then about a week ago, it was announced that the interest rate was 0.5% paid back over 2 years. And then at the last minute, I think last Friday, it was changed to 1%. And that's where it stands. So it's currently 1% paid back over 2 years. There is a forgiveness or a 6-month period before you have to start paying. So let's say if you get your loan May 1, 6 months, it would be November 1 before you have to start paying that amount back that's not forgiven.
Okay.
Although
So,
interest does accrue during that 6-month period.
okay. So they're accruing interest, but I don't have to start my payments. So that means my total is going up in that period of time, but I don't have to start payments yet.
Right.
So Danny,
But
a lot of
hopefully in
people
most
related.
cases, hopefully in most cases, most of these loans will be mostly forgiven. If we
Right.
looked at that example where I gave all but like $600 was forgiven.
So with these PPP loans, there are a lot of banks, which is where you have to apply for this through the PPP loan, that are already starting to say, we're not taking any more loan applications, and the opportunity for sole practitioners hasn't even arrived yet. So how's that going to work?
Yeah, that's interesting. The bank I've been working with, we submitted applications there on Friday. We submitted some more on Saturday, and then I found out Monday morning that the ones that we submitted on Friday was sent on up the chain, but the ones submitted on Saturday were sort of on hold. I do think that they were about to submit those maybe today, but as of Monday, they had totally shut down even accepting anymore. But some other local banks didn't even begin accepting applications until this Monday or Tuesday, even though the program officially started last Friday. So every bank is sort of in a different process. They also have different requirements. Some banks are requiring that you have another loan with them already before they'll work with you. Some are requiring that you have a bank account plus a loan with them. And the supporting documentation that they're requiring is different for pretty much every bank. So it's a very fluid situation, and it's certainly not one size fits all right now.
So it would be really difficult for somebody to apply for one of these PPP loans through a bank that they don't currently do any business with whatsoever.
Yeah, probably right now, I think so. I know the bank I've been working with, they did not have that requirement, although it seems that they are putting their customers first. If they all come in on one at the same day, they're processing their current clients before the others, is the impression that I'm getting.
So the thing I find fascinating is the loan application process began on a Friday. It was essentially almost shut down by Saturday.
Yeah, essentially.
And we haven't even gotten anywhere yet. And part of the concern, I guess, is they could run out of money. And then they've approved loans for money that doesn't exist. And then are they on the hook for that, or is that SBA backed up, or does the government back that up? Is that part of where they're stuck?
So the reason I was given, the reason they stopped accepting applications is that apparently they have a set amount of money allocated to them to loan, and that they were getting close to that limit on the applications submitted Friday, so they didn't want to accept any more into the queue. And I guess some of those that they've received will probably be disqualified for various reasons, or they won't be able to provide the supporting documents needed. So they aren't clear, I guess, of the ones they've received, how much will eventually be processed on through. And then I guess once they know that, they'll know how much more money they do have and can begin accepting more applications at that point.
So to be clear, though, the EIDL loan is processed through the SBA itself, and
Right.
the PPP is processed through a bank, some bank, local bank, whatever bank that you're doing with. Okay.
Exactly. Yeah.
And if I don't have my 2019 taxes processed yet, they're going to go off of 2018. Is that how that works?
No.
No.
So for this, if it's a sole proprietor, so that we're not looking at payroll, they're going to want either a profit and loss for 19 or a tax return. And
Okay.
I think what I've been seeing is they're wanting profit and loss statements.
Okay. So it actually prefer profit and loss over the tax return, because some of the tax returns haven't come back and have been processed and all that stuff.
Right. I guess since the due date has been extended to July, they know that in a lot of cases the 19 return hasn't been prepared, so they're being practical and asking for P&Ls. But again, that's only on the sole proprietors. The people who have payroll, they're not even asking for the P&L right now. They're asking for the payroll records.
Okay. So that keeps things moving along pretty interestingly. So this stuff changes all the time. We're going to have multiple changes probably in the next few days or the next week or so. Maybe we'll have to come back and do this again in a little while to help people work their way through that part of it. And I think a majority of the people who are probably on board here are either the 1099 sole proprietor types who are trying to figure out how to do this. Would you encourage people that is this application process easy enough for people to do on their own, or would you encourage them to talk with their accountant, their tax person, their banker themselves to help them process these loans?
The application itself is very simple. It's a 2-page application. It only asks for 2 figures. It wants your average monthly payroll, and then it has you multiply times 2.5. And I think it does ask for number of employees. And then there's a bunch of questions to determine your eligibility. But that's the actual application. And then they're asking for the supporting documents. So if you have other employees, they're looking for your 941 tax returns from last year, your unemployment tax returns for last year, payroll records showing the withholdings from the employees, and they can add up the payroll and make sure it matches the 941s and that sort of thing. If you're a sole proprietor, again, that process hasn't opened yet. But what I'm being told is they're looking for P&L.
Okay.
And it may be varied by bank. I know with the loans that have been submitted in the last week, each bank has their own requirements for the supporting documents they're asking for. The bank I've been working with is the easiest one I've seen. Others have been asking for articles of organization, everything except your firstborn almost. So each bank, I guess, can set their own requirements for what documentation they want to be submitted with the application.
And what does the SBA require in terms of supporting documentation on the EIDL loan?
On the EIDL loan, when you do the online application, there are 2 numbers that they ask for. They want revenue and cost of goods sold and number of employees. No documentation is submitted with it. Somewhere down the line, they would, I'm assuming, get back in touch with you, especially if you're trying to get more than that initial grant amount. And then I'm sure they're going to want all sorts of supporting documentation later if you're trying to get the larger amount of the loan.
So banks versus credit unions, Danny. Does credit union do any of this, or is it only with FDIC banks or certain levels of banks?
That I'm assuming a credit union can do it. I have heard that QuickBooks has started issuing SBA PPP loans, and Cabbage, the lender, is doing it. So I would assume credit unions can do it as well, but I don't know that 100% for sure.
Okay. Well, hey, Danny, I want to thank you for your time. I know this is a really complex, complicated thing. It's fast moving. There's a lot of moving parts to it. And I think you've done a great job of trying to help walk us through where this is at the moment and how it applies more directly to us. I've attempted to look at the screen and see how what questions are coming up to try to work that into our conversation as best as we possibly can. I probably haven't been able to answer everybody's question specifically, but I think we've tried to get the general gist of that. And I want to thank you again for your time, and we'll see how things transpire. Maybe we'll end up looking at doing this again if depending on how many changes are coming up to keep people up to date. Well, thanks a lot. Appreciate it.
I appreciate it. Thank you.
Okay. And I hope everybody had a great time. Great time. I don't know how this is a great time. There's nothing great time about this, but hopefully we've answered most of those questions for you. And we've given you some good information, at least to be able to talk to your either tax preparer or people in your life that can help you process through these loans. Thanks, Danny. Appreciate it.
Thank you, Tony.
Thank you, Danny and Tony, and thank you everyone for attending today's webinar. Once you leave today's webinar, you'll receive a survey for this presentation, and we would appreciate it if you would complete that and provide your feedback. Don't forget to look for your follow-up email within the next few days with the recording of today's event. Have a great day, everyone.